I'm going to start with Playboy. Having a really nice morning, up 13%. We've got Playboy beating on the top and bottom lines, swung to a profit last quarter, and it broke it down for us. Few reasons why. It bought this Australian luxury lingerie brand. It's called Honey Burdette. I was unfamiliar, but apparently it's doing well. Sales growth of 9% in the fourth quarter. Also, the brand's loyalty program has now reached 80,000 members since launching in the fall. It delivered revenue growth, also streamlining its balance sheet. Wall Street likes to hear that. It's slashing its debt thanks to a partnership with UTG Brands. It's going to use that partnership to pay down about $52 million in debt. And it's also going to license some of its Playboy items to this Chinese licensing business.
PLBY?
Yep.
PLBY is the ticker symbol.
It's gone from 50 to 2. I guess it's up, right?
It's up 13% today, down about 6% year to date.
I used to bank this company back in the day when Christy Hefner was
Christy
the CEO.
Hefner, I went to school with her.
Yep. They tried to reinvent this company, I'm going to say 30 or 40 times just in the last 30, 40 years. It's unbelievable. There's that brand value.
Right.
And they just got to figure out a way.
They can't monetize it.
They can't monetize it. It's not for lack of trying.
They're trying, and they're doing
so
some acquisitions.
I mean, I'm looking at revenue growth, and why, Paul, seriously, why are they public?
That's a great question.
That is a great question.
I've been asking that for a long time. So, we had a senior loan out to them, and every quarter was sweating it to get our interest rate.
Yeah. So maybe they're listening. Maybe they'll go private.
On the A&R, on the sell side screen, thank you, James Heaney at Jefferies and George Kelly at Roth Capital Markets. 3 people follow him total.
Yep.
I mean, it's just brutal.
Yep.
Next.
All right, Lululemon.
You got something more well-dressed than Playboy?
Actually, I don't, because I'm talking about Lululemon, famous for their see-through pants, which they didn't mean to be see-through.
I detect a theme here today.
Yeah, exactly. We like to theme our stock movers whenever possible. So the stock's not doing much, up about 0.6% here pre-market, but out with earnings after the bell. Year to date, Lululemon is down 23%. Really, the results are going to take a back seat to the main issue, which is leadership. They want an update on their search for a new CEO. Elliott Investment Management has also built up a stake, so they've got activist investor pressure. Founder Chip Wilson also fighting to replace the board. So the new CEO is going to definitely have his or her hands full here. They need to correct problems ranging from merchandise like those see-through pants, that fiasco, to pricing strategy in China. So we need to hear from Lululemon in terms of succession, and that's what we're going to be listening for after the bell.
I'd love to see, investors that I respect. Point72 just bought 1 million shares last quarter. So they think something's going on.
There's hope out there.
We'll see.
Next.
All right, Uber up 3%. And I looked, it hasn't done much of anything in the past year, only up about 2.5%. But the company's going to deepen its ties with Nvidia. It's going to launch a global fleet of autonomous cars that run entirely on Nvidia software. It's going to happen in the first half of next year. Initially, they're going to launch here in LA and San Francisco. They want to reach 28 cities by 2028. And you know what? Its competitor Lyft reached a similar deal with Nvidia. So really, I think the story here is Nvidia continues to, charge these robo-taxis.
Well, I did take my first robo-taxi in Santa Clara a couple weeks ago with my son. It was awesome. No driver, and my son made me do it, and
my son made me do it.
We did.
But it was like smooth roads. It wasn't like 59th Street.
No, it's out in beautiful Santa Clara, and we went to just to get to the In-N-Out Burger and back.